Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the S&P index, and that's the ETF, SPY. I've left my lines on the chart from last week's report, as I usually do, so you can see the accuracy of technical analysis and how it's used as a forecasting tool. And as I zoom in here, you will see that last Friday when this went out, there was no price action here. This was all blank. There was no volume. The oscillators did not look the way they do now, and I drew this line. So the line started on the close on Friday. We had 3-day weekend, so this is a shortened trading week here, and I said that the SPY would drop to this pivot point right there. Notice where my cursor is, right there as I magnify that. And then I said we would most likely bounce from there. And again, if you're not a believer in technical analysis and how it's used, not just as a forecasting tool, but as a risk management tool, then I don't know what else I can do to prove this to you, because week after week we do this and it's extremely accurate. Now, what does that mean for next week? Well, the spiders showing that hammer pattern with that long shadow, that candle in and of itself is a bullish candle. But the volume dropping oh so slightly here is telling us that the sellers are starting to lose some of that downward momentum. So the drop in volume is actually a leading indicator, and that supports what we're seeing up here in price action. Now, there is a slight divergence from that moving average, one that we have not seen in a while, because as you can see, the S&P has been hugging that moving average almost as a trend line. And so the stochastics down here is starting to hinge up. That would be bullish. The CCI down here is oversold, but I think that's going to start to turn next week into a buy signal right there. And then I believe that the markets will then move right back up to test the high being the resistance right here at the 20-period moving average, just like that. So I'm going to erase this line because I think the rally early in the week is going to be steeper than what I suggest here. So Monday and Tuesday, I think we could actually rally up to that 20-period moving average. And then we really have to watch out here, because if we turn down from that moving average and pivot lower, this moving average, as it curves over, rolls over just like that, that moving average will then turn into resistance. Now let's take a look at the VIX, because the VIX is inversely related to the SPY, and we'll do the forecast as well. Last week I said that the VIX would most likely go up to test this resistance. It did just that on Tuesday, came within pennies of my pivot point here. You see that? And then I said the VIX would roll over with the end of that line right there, 28.73 being my target. And what happened? We hit the target. The other thing that I did, and I encourage you to go back and listen to the recording so you can see this again with your own eyes. I forecasted what I thought the 20-period moving average would do right here. I said what we have to watch for is the convergence of price to this moving average. So I do think that the VIX, let me erase all this here so I can clean this up for you. I believe that the VIX will come down just a bit to test that moving average, and then I think we're going to see a bounce off of that moving average. Now remember, what does that mean for the S&P if we go lower at the beginning of the week? Well, like I said, I think we could rally Monday and Tuesday before selling off later in the week. So that means the VIX would most likely start to move higher. What's happening here is we're looking at price, we're looking at the oscillators, we're looking at the moving average, how it relates to price. And the VIX, although it's not a stock, it does give very strong technical signals for pivot points especially. So let's look at the diamonds. That's ticker symbol DIA. Interesting thing happening here as well. I said that early on in the week, we'd most likely rally up. That happened on Wednesday. Look at that, pennies from that pivot point. And then I said later in the week, we would most likely drop, with the end of the line right there being my target at 275.87. We hit that precisely, but more importantly than that, I drew this flatline support level saying that the markets would most likely test that support. Now, I'm going to leave that support level in place because, like the S&P, I think that the diamonds will start to rally early in the week, and then we'll have to see. I think it's going to head right back down after it bumps its head against this resistance area right here. So I'm going to erase this. I'm going to more or less forecast what I think the stochastics is going to do. I think that'll move up, and I think the CCI will start to move up and cross with a buy signal there. So again, the message, the strong message, is to make sure you're managing risk on your portfolio or your trading account, because if we break out below that support level right here, you have to watch out below in a much more dramatic way, because that could mean, as we get closer to election day, a lot of investors might be flattening up on some of those long positions, anticipating maybe some signs of confusion or hesitation to get back in the market the week of election Tuesday. So be really careful of this market right now. We're at the cusp of a possible pivot point after we bump against the 20-period moving average, and that's the diamonds. Now, let's take a look at a more broad-based index, which is the Russell 2000, seen here in the IWM, which is the ETF. Same story, really. I said that we would most likely move lower and then bounce. And what happened? Right here, Tuesday, we moved lower. Here's the support level that I drew, because I said we would most likely go down here to fill the gap. And that's exactly what we did. And that gap fill point here from last Friday became support. So we bounced, and then lo and behold, on Thursday, what is that? Well, if you're following technical analysis and learning about bearish engulfing patterns, that's it right there. Now, I'm going to erase this and give you my forecast for the Russell. This is not as bullish as what we saw on the short-term chart for the spiders, but there is a long shadow, almost equivalent to the length of the body here. I do think that the Russell could rally a bit, but I think the Russell 2000 is actually going to wind up lower on the week, unlike the Dow and the spiders, where I think we could match the lows from this week. And the main reason I say that is because although it's a red candle, look what happened to the CCI down here. I'll magnify that. CCI started to go up. It looked like it was about to cross with a buy signal, but this bearish engulfing pattern threw the wet blanket on the party, and the CCI started to move lower again. That's why I think it's showing more weakness than strength at this particular point. So keep an eye on your downside. Make sure your stops are in place there. Let's look at the Qs. Ticker symbol QQQ, basically representing the Nasdaq market. Before I go into what I said last week, I want you to notice something. Since the beginning of April, right here, end of March, when we started that bounce from the pandemic sell-off here, we were able to maintain this 20-period moving average almost as if we had a straight line trend line there. And look what's happening right here. The Qs are having a hard time getting back on trend. Now, with that said, let me zoom in. I did say last week we would move lower on the Qs, and I drew this flatline support as a test for this low. What happened? We moved right to that support level, and then, like I said, we bounced. But then on this bounce right here, another bearish engulfing pattern. So the story is going to continue. I think the tech, like the Russell 2000, is looking weaker than the Dow, actually. But I'm still going to take a shot on this one because of the divergence from the moving average. I think the Qs are going to try to rally, and then I think we're going to see a failure of that later in the week. Again, for anyone that's long, make sure you're using good risk management technique. I promote and strongly follow the 1% rule for managing risk. If you want to know more about that, just visit us and I'll make sure I either email it to you or post it in the next alert. All right, so that's it for now. You have a great weekend. Talk to you soon. So long.